Crude oil is trading marginally lower on Monday. On the whole, oil prices maintained the momentum trading at the levels of Friday. The Russian ruble is showing remarkable resilience. Today it is retreating from the local highs. Oil prices rallied on Friday. Brent crude closed the last trading day with a 2% gain. Market participants cheered the news from the US and China. Economic data from both countries beat analyst expectations. China's manufacturing sector expanded at the fastest pace since 2017. This downplayed fears about health of the second largest economy in the world. The US employment fell in October to a lesser extent than expected. Besides, investors are encouraged by the first signs of progress in the trade talks. The US Commerce Secretary Wilbur Ross indicated that the first phase of the trade deal with Beijing was likely to be signed in mid-November. Today, Brent crude is trading at $61.55 a barrel amid escalating downside pressure. Crude oil is expected to trade under such conditions until the year-end. Oil output in the OPEC countries rebounded from the lowest level in 8 years. Saudi Arabia managed to recover its oil production on a tight schedule and offset losses following drone attacks on the major oil facilities in September. Traders are voicing concerns over robust crude production in the US that logged the record expansion of 12.4 million barrels in August. In early November, Donald Trump assigned the U.S. military to reinforcing its positions around oil fields in Syria. Citing the U.S. president, the U.S. troops would remain in Syria for this mission. The Russian ruble is trading at local highs. On Friday, the ruble gained ground following the rally of oil prices. Growing investors' confidence in global financial markets boosted demand for risky assets. This pushed the ruble to the lowest level versus the US dollar since July. The dollar-ruble pair is trading at near 63.33. After the bank holiday in Russia, the currency pair is expected to grow to 63.70. In November, the ruble is likely to trade at around the current levels, though some analysts warn about a pullback to 65 against the greenback. The ruble could come under pressure due to larger repayments of Russia's public debt on the back of the same forex interventions under the budget rule. The Russian currency will be sensitive to the comments by the Bank of Russia on the prospects of a further rate cut at the December policy meeting. So the ruble is facing a turning point. On the one hand, it could strengthen even more amid the prospects of further monetary easing. On the other hand, too aggressive rate cuts are bearish for the ruble. Market participants are closely monitoring macroeconomic data from advanced economies. Downbeat data could reveal growing risks of a slowdown in the global economy and discourage investors. The burning issue of November is going to be the trade agreement between the US and China. That's all for now. Thanks for watching and stay tuned.